Hi, I'm Laura. I'm the data manager at Avex. In this episode, I'd like to walk you through a case study demonstrating the practical application of CO data in trading strategies. As I have mentioned in previous videos, CO data is a form of alternative data, specifically tailored for the crypto market and derived from proprietary sentiment data that can be directly utilized to inform trading and investment decisions. The specific strategy we will be discussing today is a momentum rotation strategy based on a combination of community sentiment and price momentum. The specific implementation of this strategy involves investing in the top three assets based on their community sentiment momentum. First, we'll curate our asset pool. We construct a distance matrix based on a token by date mention count matrix, and then employ hierarchical clustering to group the various tokens. As illustrated in the figure, this process yields 10 distinct clusters, effectively assigning each token to a specific regional sector. This categorization serves as the foundation for subsequently identifying sector-wide linkages and formulating our trading logic. You can view the complete list of these classifications right here. For instance, tokens such as ADA, APE, and ARB exhibit mention volumes that are significantly lower than those of major assets like BTC or ETH. The next step involves calculating momentum matrix. As shown in the diagram, the momentum of any given token is calculated by dividing its current price by its price from 30 days prior, and then subtracting 1. We retain only those strong assets with a positive 3-day return. Assets with a return of 0 or less are deemed weak and are eliminated from the candidate pool. The third phase of the momentum rotation strategy, sorting and selection, involves the assets that have passed the absolute momentum screening. For these assets, we calculate their relative ranking volatility over the past week and determine their 7-day ranking change. We then sort these assets in descending order based on their relative momentum, select the top 3, and ensure that these top 3 assets do not all belong to the same sector cluster. The final step is the dynamic portfolio rebalancing mechanism. We assume an initial capital of $3,000 with an equal allocation of $1,000 invested in each of the 3 selected tokens. Every 3 days, we recalculate the momentum matrix and identify the top 3 tokens with the highest momentum to serve as our target holdings. We then sell off any tokens currently in our portfolio that no longer rank within the top 3, and subsequently purchase the newly ranked top 3 tokens using an equal weight allocation strategy. Based on this preliminary strategy, we conducted a simulation using data spanning from July 2024 to June 2025. This simulation generated a series of trading signals. By executing trades according to these signals, we were able to plot the strategy's equity curve. As the chart illustrates, this strategy achieved a total return of 38.6% and an annualized return of 43.64%, making it, by any standard, a highly impressive strategy. But what if we were to forego the momentum rotation strategy and instead simply invest in all cryptocurrencies on an equal weighted basis? Let's assume we start with an initial capital of $3,000 and use it to purchase an equal weighted allocation of every cryptocurrency currently listed with a market price on that day. We then hold these assets for the long term without making any subsequent portfolio adjustments. Using the same data period, which is July 2024 to June 2025, we calculate the final value of our holdings on the last day of the period, based on each coin's closing price. Summing these values yields our final net worth. The result reveals a total return of minus 9.16%, indicating that the overall market trend during this period was bearish, causing an equal weighted investment across all coins to result in an average loss. This chart presents a comparative view of the equity curves for two approaches: our top three community momentum strategy and the equal-weighted holding strategy. The blue line represents the performance of our rotation strategy, while the yellow line depicts the performance of the equal-weighted holding strategy. It is abundantly clear that the blue line significantly outperforms the yellow line. This serves as a practical, real-world application of our community sentiment indicators within the realm of cryptocurrency trading strategies. If you are interested in our sentiment data, we invite you to visit our official website at www.cryptorackle.network. And of course, don't forget to hit the follow button. I will be sharing more fascinating case studies in the future. See you next time.